following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old row. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 75, NASDAQ off 22, S&P's down 10, gold contract down $3.10, trading at $1,314 an ounce. Silver down 41 cents at $18.80 an ounce. Platinum down 19 bucks at $1,006 an ounce. Copper off 2 pennies at $2.19 a pound. Light sweet crude up 41 cents, $48.65 a barrel. Bonds, 10-year note down 5 ticks, 130.30. 30-year bond off 4 ticks, 168.01. King dollar up 200 ticks, trading at 95.58. The euro is trading at $1.12, and the yen is at 101.55. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we have divergence between the S&P and the NASDAQ and NDX 100. So the SPY on Friday got to a price point of $217.12. It closed at $216. It did 117 million shares versus your downdraft of 221. That's a failure on price, failure on volume. Bottom line, you're backing down today. It's an inside day. But thus far, SPY failed once again. Dow Industrials, same setup inside the Dow Industrials. Dow Industrials actually didn't even get up to get the test of the 18,404. The high on Friday was 18,369. Then it just gave it up coming into the close and closed at 18,308. Bottom line, Dow Industrials also a sideways move out here today. Now, NDX 100, 3 Qs. 3 Qs on Friday got to a price point. So first off, your high in the 3 Qs is $119.22. The low of that high is $118.77. So we get to $118.70 today. Friday, you get to a price point of $119.07. Bottom line, I expect that we're going to be right back up there. This thing wants to get tested. So you're in the higher range right now. And here's where the divergence comes in, meaning that you have the NDX 100 as well as the composite. So if we go over to the NASDAQ composite, we take a look at the composite. Composite's down 20 bucks right now, but guess what? This thing looks like it still wants to test the high. So what you have here is that you're either going to see the NASDAQ drag up the S&Ps and the Dow, or the Dow and the S&Ps drag down the NASDAQ. Gold contract. What do we have with the gold contract? Gold contract can't catch a bid. Gold is down 290. That's not a lot. There's no doubt about that. Volume's not huge, only 112,000 contracts. Where the problem comes in, folks, is that you're right at the bottom of the range. We hit 1311.80 this morning. What I expect, we're going to go hit 1305.50, which is the low of this contract, and we'll see whether it breaks or not. It's light volume today. It certainly wasn't light volume when it was pressing into this low last Friday. You know, you have juice as you're pressing into that low. So we'll see whether it breaks it or not. You break it, you're going to be down to Brexit Day, which is 12:59.10. Silver contract. Silver's lined up the exact same way. Silver, oh, interesting. Silver's talking, walking, and squawking again. Oh, baby. Okay, we're going south. We're going down here. So silver's always much more volatile. There's no two ways about that. But what we also have happening with silver right now is that you've done 51,000 contracts. You're down 39 cents. You're going after the last swing low out here, which was 1876. We had 82,000 contracts. So you're coming into that with some decent contract volume. It looks to me like, yeah, this thing could break apart tomorrow. It looks like silver's going to break first. So silver breaks $18.40. Silver also will be down to the Brexit start-off day, which is 17.25. Bonds. Now, this is where this gets really interesting, and this is why. So on Friday, the bond market went south, had volume behind the move. What we have out here today is that on the 10-year, you're back 5 ticks, and you've done 719,000 contracts. Well, you're coming into 1.1 million contracts at 130.23, and we've hit 130.31. So I expect what we're going to see, more than likely, is we're going to see it come down, hit that tomorrow. And here's the kicker. It looks to me that you'll get a rejection of price. If you get the rejection of price, guess what? Bonds are going to go right back topside, meaning higher price, lower yield. We go take a look at the 30-year. What you have with the 30-year is that 30-year contract, 30-year bond rather, is down today with 158,000 contracts. That's low volume. You're coming into we're at 168.02. I suspect we're going to be down another point of 167.02. And at that level, it's going into 275,000 contracts. So what you are doing is that you're pulling it down into where we had some strength on the way up, and there's dramatically lighter volume. King dollar, what do we have with King dollar? So King dollar is laying out here. King dollar, sideways move today. You're up 200 ticks, 15,000 contracts. What King dollar has done is this. On Friday, King dollar made it to the price point of $95.85, and it had volume behind the move. So I expect we're at least going to get that tested. King dollar has been going sideways out here also since the 26th of August. It has rejected lower price on a continual basis, but it hasn't shown the type of strength that it should show if, in fact, we're going to go up to those swing highs. My take is that that's where we're going. But the longer this goes sideways without that sign of strength, the longer it would be like, okay, are you going to get dragged down? Our phone number is 877-927-6648. Dow Industrials right now down 63. You get the Nasdaq off 19. S&Ps are down 9. Stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 64. You got the NASDAQ off 18. S&Ps are down 9. As we do each and every Monday at 20 past the first hour, we have our man, Mr. Steve Rhodes. And don't forget, folks, Steve's got an outstanding show every trading day right here at TFNN, 1 to 2 Eastern Standard Time. And, of course, all the trading, all the programming at TFNN, you can get right on your cell phone. You go to TFNN.com, hit Tiger TV. Now, as you come over to our website at TFNN, you're going to see right in the top of the carousel, Trading Range Boundary Lines, October 19th, with our man, Mr. Steve Rhodes. Steve is going to be doing a workshop, folks, for his subscribers. You can be a subscriber right here, right now. It's a great promotion, and this is how it works. Steve's newsletter is normally $149. You can get the newsletter for the full month for $49. The workshop is going to be about trading range boundary lines, hidden support, and resistance. We're going to let Steve talk to you about that. What comes with the workshop is this. You get the workshop, you're going to get the newsletter. What you're also going to get is you're going to get the last three workshops that Steve has done. The first one that we're talking about is you're going to get the let me go through. We're going to get okay, so the first one is going to be the long shot line that every trader needs to know, the oscillator unchanged line. That was $149 value. The second one is the ultimate trading signal, Japanese candles. That was $149 value. And the next one is the ultimate reversal patterns. It's Tom DeMark's TD setup. It's H.M. Gartley's buy and sell patterns and the price relative strength divergent reversal patterns. You can get all of those, folks, $49. Check it out on the front page of TFNN. If you sign up right now, you're going to get those 3 workshops right on your page, right here, right now. Steve Rhodes, what's going on?
And let's just throw in my money management workshop, too. Let's add another $149 value.
That's a beautiful thing, man. Totally. That's quite a deal, man.
It is. You know, it's something that we've never done before. It's great to, you know, when I first started writing newsletter service, I used to do a workshop every couple of weeks for subscribers. So it's great to get back to doing these just to assist everybody with regard to, hey, what it is that we're looking at while we're making the trading decisions that we are, and then just simply be able to to, educate those folks like yourself and me that have the passion to want to do all this technical analysis. So the next stage of that learning process is where I'm going to be doing the workshop about the trading range boundary lines, and it's 2 weeks. It's 2 weeks from this coming Wednesday, so October 19th, 5 to 6. People don't have to worry about if they can't be there live. That's okay because it is archived. In fact, as you mentioned, there's going to be 4 other workshops that people have access to. If they sign up today, it immediately goes on their members page. They'll have that through November the 18th. So they'll have it for the next 40 days or so, 45 days or so. So it's a perfect time. And I always take these important technical tools and really boil them down into what it is that people need to know in a shorter period of time as possible. So it's an hour or it's an hour less. At this workshop, for example, Tom, I'm going to teach subscribers how to identify, how to plot the horizontal support and resistance levels that create these trading range boundary lines. And oftentimes we're going to see price contained within support and resistance, very much like the market that we're trading in now. So I thought it would be ideal to take a look at, those aspects. And it works on all time frames, all instruments. We're going to also plot the diagonal support and resistance, what to look for, how to identify the breaks of those channel lines, what it means on the retest, which is what one should anticipate, how we're going to go ahead and trade the lightning bolt pattern, the A to B equals CD patterns within those price channels. So that makes some of the other workshops that I've done really key to being able to trade these. That's why I thought it would be really worthwhile for us to go ahead and integrate all this into one overall package. And you can't beat the price, that's for sure. So, and the question, any listener or viewer should be asking is, why is this important? So let me just start off by giving a few examples. We know that our subscribers love trading the metals market.
Yes.
They've made a ton in 2016. Probably the most profitable trade has been inside the metals marketplace. And a lot of people like trading the leverage products. Maybe it's just the GDX. Maybe it's the Nugget. And it's so important to understand the weightings inside of those ETFs.
Yes,
and so if we take a look at just the two top, most people don't know that inside the GDX, the two top stocks, Barrick Gold and Newmont Mining, represent nearly 20% of the ETF.
Right.
That's a pretty heavy-duty weighting inside there. And what's on my screen right now is the monthly chart for Barrick Gold. And right now, the key price level for Barrick Gold is $19.24. It's $19 and change out there. This is a chart that goes back on a monthly basis for the last 20 years. And 31 times during the last 20 years out here, price gets stopped at this $19.24 level. We're trading below it right now, $17.30. Real good chance that where Barrick Gold is actually headed to is about the $14 level. So now, if we get above $19.24, that is gets us back into that bullish mode for Barrick Gold. That would bode well for the GDX. If we take a look at the daily chart out here, maybe price doesn't get down into that $14 level. The next stop on the way down is going to be $16. The lines that go across my chart out here, Tom, the red lines are for monthly levels. The blue lines on my chart are the daily levels. And these are going to be different on each time period because of how we actually calculate these significant levels of support and resistance. So 1821 is another key level that we are now trading below inside of Barrick Gold. More likely than not, we're going to see 1602. And when you take a look at, as you were talking about silver, makes sense out there with regard to the mining equities. If we take a look at Newmont Mining as an example, coming off of the bottom in 2016 in January timeframe here, price stopped right at its weekly horizontal trading range boundary line, 1488. So for traders that were wondering, hey, should I take my profits? What should I do? The information is really right in front of us. You're coming right up into a significant level of resistance. Right now, price is trading below its monthly horizontal trading range level, which is 39.30. So it's below two real significant levels of resistance out there. The GDX, just as an example now, if we try to put that together with regard to those two mining equities, the GDX trading below an important level of resistance, which is $30.17. So 2204 is the likely next area for us to take a look at the GDX heading back.
And that's where the gap is too.
Yeah, so it's ideal, and I want to be able to teach traders, investors, because what's so important about this is ahead of time, you know where the battle is going to take place. You know where these levels of support and resistance are. Back in January 2016, looked pretty ominous for the Russell 2000, as it was one of the few indices that actually broke its long-term trend line. Came through back in the January, February timeframe, but by the end of February, price had gotten back up into that price channel. But now, if we take a look at where we're at in the Russell 2000 on a weekly basis, right up against significant resistance, that 1260 area. So, folks, come on over to the homepage at TFNN.com. $49. You're going to get the workshop. In 2 weeks, you're going to get my ultimate trading signals. I'll teach you all about Japanese candlesticks. You'll find out about the best patterns out there, the lightning bolt pattern, how to buy and sell the D point, price relative strength divergent pattern, some of Tom DeMark's indicators out there, and then that oscillator unchanged line, as well as the money management workshop. So we've never had a better deal than this.
And what does happen, as Steve just said, folks, if you sign up right now, you're going to get the newsletter, but you're going to get all those workshops right now that you can go over as many times as you want, which is just dynamite in itself. Pretty amazing.
Absolutely.
You have a great one, safe one, Steve. Of course, we look forward to the show tomorrow.
Thanks, Tom. Take care.
Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 61. You get the Nasdaq off 18. S&Ps are off 9. Let's go to Victor in Texas. Hey, Victor, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. Yourself?
I'm having a great day.
That's a beautiful day. What are we going to look at today?
Hey, could you take a look at the UNG natural gas? I'm wondering when this thing's going to bottom here. and I wanted your opinion.
Okay, let's take a look at it. So UNG, folks, is a U.S. natural gas fund. That's the ETF that trades off of the gas being delivered at the Henry Hub in Louisiana. The low for this on the year is 578. The high is 1181. Okay, so I'm going to go right over to the gas contract because this trades right off this gas contract. And what gas, folks, is in a consolidation. And each and every time you get up into this $3 area, they sell the heck out of it. The bottom of this area, so Friday we came down with 168,000 contracts. You're at 119 right now. What I'd do first, Victor, is I'd let this get into 281. And right now you're at 291, so that's 10 cents, which is a lot in the gas contract. It's been doing that. It moves 4 or 5 cents a day either way. But
Right.
I'd let it get in there first, and then see if you get a rejection of price. Because
Right.
the range is set up pretty clearly, like at 276, and I'd say 310 on the top side. So if we go over to the UNG now, let's go back to the UNG. And you take a look at the UNG, you know, the UNG backing down, well, it's flat today, it's down a penny. That would set up somewhere around like 770, I believe, inside the UNG.
Yeah.
And if you get a rejection of price there, you get action. I mean, that would be a good trade there, period. Even if it just lays there and you don't get a full rejection, let's say the day before. Natural gas numbers come out every Thursday, folks, at 10:30, and that would be a decent setup because of the fact you can put your stop right underneath it. You know what I'm saying?
Right.
And then you're going for the top of it again. You know, so the range inside the UNG is really is 770 to $9. That's how it's set up.
Well, I recall, you and Andy talking about it periodically, and Andy was thinking that it was going to get into this 290 to 340, 350 range, and I can see maybe that happening, but slowly they're whittling away at the inventory because of production, and hopefully if we get into some serious cold weather and start pulling that inventory down quickly, I could see that So I'm thinking this is like the last drawdown. The last drawdown's a bad word. The last sell-off before perhaps winter sets in and everybody starts using a lot of it.
Well, my understanding from the last report, and I'll talk with Andy about this tomorrow when he's on, because don't forget, Andy's got a great show, folks, after me, Tuesdays and Thursdays, 5 to 6, is that there is less gas across the country. But that being said, is that where the less gas, meaning stockpiled, okay? But where that is in the Gulf Coast, where we are here, which we don't need it, and in the Pacific, where they don't need it. And where they're going to need it is in the Northeast, is in the mountains, and in the Midwest. And in those areas, they have more than they did last year. So that's where, so that's where you got to be careful. So it's like, where they don't need it, they don't have it. But guess what? Where they would need it, there's more than there has been even last year. That was what I got out of the last report, so.
Yeah.
And gas, it can't be moved around like oil. Well, it can be, but it's not in the United States, so that's something to take into consideration. You know what I mean?
Well, I've been trading, you guys the last week.
Yes.
And it's a wonderful trade.
It is. No, it's a great trade.
You just can't stay in it. You can't stay in it for more than a couple hours.
That's right. And UGAS, folks, UGAZ, that's the velocity shares 3 times. Long natural gas. Listen, the doubles and the triples are great as long as you're trading them. There's no two ways about that, man. They move and they move fast. Period. Hey, what's so cool about them, and it sounds like you're doing it. What happens with them, folks, is this: if you actually trade them, guess what? You can almost be bullish or bearish because they both move bullish and bearish all day long. You just have to be willing to hit singles and not go for like a grand slam, and then you're in good shape. I mean, It blows my mind how fast 30 or 40 cents can be up or down in just about all of them, particularly once they get about, if they're trading at the 20 and 30 level, folks, 20 and 30 cents is like a heartbeat in them. So.
Well, you guys moved $2 today. It was crazy. And, you could have taken either side of the trade and just walked away, which is what I do.
Look
walk
at this.
away.
Yeah, so
wait for it to...
34.91. That's what it opens there. It opens at 35, but it goes right down to 34.91. And within an hour, it's at 36.38. That's pretty intense, man. Yeah.
Wow. To 30. Didn't it go to 37?
It did. Well, I'm just saying within 2 hours it went to that. It ended up ticking out at 37.24 with that 20 past 1 this afternoon, 20 past 2 this afternoon.
Yeah, it's nuts. It's
a beautiful thing. It's a beautiful thing when you're on the right side of it.
I know. yeah, exactly. So, all right, well, I'll put my patience hat on and see if I can't watch this thing get walked down.
Well, you can trade the other side of it, too. You can trade it down and then trade it back up. Yeah.
Right. Yeah, okay.
Cooking,
Terrific.
man. Have a great one. Have a safe one.
Thank you.
877-927-6648. Market-wise out here, folks, what you're going to have, we're going to have short volume, so you get a sideways to lower movement with light volume, and that says, guess what, that the bounce is going to be coming in this market. You get the NYSE, we're tapping out right now. We only get 500 million. That's going to come in probably about 700 million. The NASDAQ Composite's at 1.2 billion. That's going to come in about 1.8. And what the composite did have on Friday is that the composite was actually pushing high with volume. The composite did 2.1 billion shares on Friday. So that is really 2.05 billion shares. So when I look at that, particularly today with lighter volume, that's saying that guess what? That NASDAQ composite, as the NDX 100 wants to get in and test that high once again. Now, the Dow and the S&Ps, they have zero juice. If we look inside the Dow, taking a look at what's moving it out here today, this is what you have. You have DuPont is the leader. That's up 1.4%. You get United Technologies up 0.9. J&J is up 0.5. Taken away from it on the way down, you get Travelers down 1.2%. Procter & Gamble's off 1.1, United Health off 1.1. Inside the NDX 100, what we have, the leader out here is Cognizant Technology. That's up 5.5%. Tesla's up 4.8. Netflix up 4.2. Taken away from it, Qualcomm's down 2. Autodesk is off 1.5. Gilead is down 1.5. And Broadcom is down 1.4. 877-927-6648. Give us a call, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 36. You get the NASDAQ off 9. S&Ps are down 5. And let's go take a look at Taser. Taser International is taking a beating. It's getting tasered itself. That baby's down 420, trading at $24.34. And this is just blowing away a swing point with volume. Let's bring this back a bit. Let's see what we're looking at. Okay, so pretty amazing. So check this out. This is I have this on a weekly going back just the last couple of years. So we had a high in Taser at $35.95. That was in June of 2015. Taser goes straight down the tubes to $13.50, and then comes all the way back up. If you want to see how an equity can go high on no volume, it's a mind blower. But then you'll also see how it just falls apart, and you never know what day it's going to fall apart. So we go from a price point of $13.50 in January. You go all the way up to a price point of $30.15, and that was established on the 5th of August, okay? So you're going higher with 6.4 million after you come down with 21 million. And watch how this shakes out, because you always get a few chances to get out or get in. And then what does the equity do? The equity on September 2nd goes from a price point of $29.60 to $26.48, again with an expansion of volume, 7.1 million, right? Okay. Then it comes back up and tests the 7 million day Friday with 4.8. So your correlation goes like this. It's 4.8, which is testing the 7 million. That's your smaller benchmark. Your larger benchmark would be 5 days prior to that, as 6.4 million is testing what? Is testing your downdraft of 21 million. And then what ends up happening? Blows out of the water. It's taking out a swing point right now, and Taser's more than likely on its way to $20. And what the news is, I believe, thanks, Dave, I believe, Mr. Dave White gave me a heads up on this in the den. And the news is that they missed a New York, let's see, Taser competitive View You won a $6.4 million New York City Police Department body camera contract, which could signal price competition. They lost the contract out of New York. And what you also have, that's the first part. The second part is actually larger, and the second part would be the aspect that View You had a price point of $20 per camera per month, and Taser's price point, folks, is in the high 40s per month, okay? So it's pretty intense. It's pretty intense of how much they're just actually getting. So it's a subscription-based service. That's pretty intense, man, what they're actually getting. So Taser, so just picture that. So you're talking about if you went with a Taser contract, it's almost $600 per month subscription fee. Pretty intense. Let's go take a look at some of the higher volume stocks in this low volume market. And what we are going to have, by the way, folks, is that next week it's going to be pretty wild because earnings kick off again next week. You get, on the 11th. You get Alcoa kicking things off on the 11th, and then everything will get starts off slow and then gets fast and furious. Inside the higher volume equities out here today, you have Micron down 8 cents. Procter & Gamble's off $1. We have Apple down 36 cents. GE is up 6 cents. You have Cognizant Technologies up $2.67. Netflix. Let's see what Netflix is doing. NFLX. So Netflix out here. This caught a bid. Okay, so Netflix right now up $4.18. You're going to go test the swing high up here of 101.27. Actually, you're at 102.72. So this is going to get into the gap. When this gap down. Now, it's going to be a lot more volume than this. When this gap down in April, Netflix had been trading at $111. On the 18th, it went to 106, and then the following day it went to 94. Big monster move on the way down. It came up and tried to get into that gap on the 26th of May, and it looks like it's going to try it again. That number there, that'd be 104 that'd be looking for. The way this is trading today, though, it's getting over these levels and it has some juice behind the move. I think you almost could. Let me put this on a weekly for a second, because it's close that you very well may have a small ABC up inside a down draft. Doesn't mean that you can't take that out, though. So if it's an ABC up, it'd be 84.50. It's a decent one. At $15. 93, 103. Oh, interesting. 108. So it's approximately, the A to B equals C to D is approximately $108. And 110 to 111 is the next swing high up there. So I suspect we're going to get up at least about 4 points. That's what it looks like at this particular point. XAU and the HUI, bottom line, both of these, we're going to know quite a bit about these metal markets, if you're in these metal markets, folks, in the next couple of days, because what they are doing is that they're coming down into the lower end of their consolidation. The XAU right now is down $2, trading at 91.92. And that lowest swing point, which is going to go after, is 89. The Gold Bugs Index right now is trading down 543. That is going to be going after the 219.50 mark. So it's a make or break time. My take on this, because we've been here so long building cars, these gaps that were left over from the 2nd of June, I suspect they're going to get filled. The cool thing is where we are in the metals market is this. Is that it's either going to do an ABC structure on the way down, you break the B point, break it with volume, and then the cool thing there is that then you know what the price projection is. Or, flat out, it's going to come into those levels, it's going to reject it with lower price, and then guess what? Then that would be basically saying that game is on again. And then what we'd be doing simultaneously is taking a look at that dollar index and say, okay, is that dollar index going to fail where we are now and not go after that higher swing point? What I do expect it will do is that it will go after the swing point from last Friday, though. So it's a telling number, right now inside that market. My larger take is it looks to me like it's an ABC down, but the cool part about where we are right now, that market's going to tell us because we've been consolidating so long at these particular levels. What has happened with a couple of these, if you go to Gold Corp, Gold Corp's down hard. It's down 80 cents. You're trading at 15.72. The weird thing is that you never know where these come out of, meaning, and in Gold Corp's place, what is happening is that you have This is company specific, and Goldcorp's deal there in one of their biggest mines right now. They have a huge protest, and they're blockading the mine, and it doesn't look like they're going to get them out of there anytime soon. You stay right there, folks. We're coming right back. Dow Industrials right now are down 42. NASDAQ is down 10. S&P's down 5.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So let's go over and take a look at the XLE and the XLF. So the XLE, the energy sector, folks, hanging right at the highs. We are at, it's flat market out here at $70.60. And, yeah, this high wants to get tested. So you're at the top of the range. The range falls like between $70.26 and like 71. Right now you're at 70.57. That's the top of the range. The bottom of this range is laying out here about 64. The thing that's amazing about the oils, and that's what I really like about them, they love trading in ranges. And this particular range here, watch this. This is like, let's see how long this has been in this range. Yeah. So this has been in this range since April of 2016. You know, so we'll see whether it can get up and over it. It certainly, last week, what it did is it pushed higher with volume. Bottom line, it would have been great if it took it out last week, but guess what? It didn't. So it's going to go after it this week. The XLF, the financials, take a look. The financials can't get out of their own way. Whatever is coming down the pike in the financials, folks, bottom line, whether I suspect going to be more scandals because the XLF can't move. The XLF right now, we bring this back, even with the XLF has been at the same place since October of last year, but it just doesn't have any juice whatsoever. If we go over and take a look at J.P. Morgan Chase, what you have with J.P. Morgan, bottom line, we're at 66.42. It only needs 20 cents lower to get into the lower trading range. Wells Fargo is just a mess. This is breaking lows. And it has some volume behind the move out here today. You know, what I expect you're going to see is that the CEO of Wells Fargo, he's gone. They're going to can him, man. I mean, it's the writing's on the wall. They had analysts out there this morning trying to say just how great a bank Wells Fargo was. And in fact, this was one of the quotes that I heard on Bloomberg, which is just a mind blower. And it was too bad that Tom Keene didn't get all over this guy because he should have. He asked the first question but didn't follow it up. The analyst was saying that there was just a handful of people that were doing something wrong at Wells Fargo. And it's like, oh, really, a handful of people. So why did they fire 5,000 people? Okay, is that a handful? You know, bottom line is they have a problem. They have a big problem. Bank of America is out here at $15.64. Let's go to Berkshire Hathaway, because Berkshire Hathaway is the largest weighting structure inside of the financials. And Berkshire doesn't look all that bad, but it did come off the highs, last high with volume. So Berkshire, we'll see how it handles. You're at 143. We'll see how it handles the 140 level. You get 140 to 136 that it looks like it should hold. And, you know, Berkshire has when you look inside their portfolio, of course, what ends up happening is that something that's hurting them right now, one of the bigger ones is going to be Wells Fargo. You know, they own 10 million shares. No, oh my God, 10%. They own 504 million shares. Now, what I suspect is starting to help them, which hasn't been helping them, it won't help them in a longer run from what they owned it for, but IBM. You know, IBM is putting a little juice into the portfolio now. Let's see what they own. Yeah, and they own 81 million shares of IBM. So, you know, IBM certainly is not at the 210 high it was. It's 157, but guess what? IBM 3 months ago was trading at 142. So they're getting a few little equity plays inside, meaning push up in equity inside their portfolio. You stay right there, folks. We'll come right back. Dow Industrials right now down 51. Nasdaq's off 10. S&P's down 6.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How are
man.
you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Make it a great month. Make it a great October. You gotta love it, man. Pretty insane. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 54. NASDAQ was down 11. S&P's off 5. Gold contract down $1.50, trading at $1,315 an ounce. Silver down 33 cents at $18.87 an ounce. Platinum down 18 bucks, $1,007 an ounce. Copper off 2 pennies at $2.19 a pound. Light sweet crude up 40 cents, trading at $48.64 a barrel. Bonds, the 10-year note down 4 ticks, 130.31. 30-year bond down 4 ticks, 168.01. King dollar up 230 ticks at 95.61. The euro's trading at $1.12, and the yen is at 101.59. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out, folks. For the S&Ps and for the Dow Industrials, your September 9th downdraft, they can't handle it. The high of the September 9th downdraft in the SPY was $217.03. We did 221,000 shares there, 221 million shares there, rather. First time that we went up there and tried to get into it, that was on September 22nd. You did 78,000, so your correlation is 78 million, rather. 78 million versus 221, no way. Next time was we went up there 3 separate times last week. Each one of them couldn't make it. The first one on Wednesday, you did 87 million shares. On Thursday, we did 128 million shares. On Friday, we did 117 million shares. None of them made it. Okay, so now what do we do today? Today, you back down with 81 million shares. So that's dramatically lighter volume on a back down. What that says is, guess what? More than likely, it's going to try to test it again. So, I suspect that's the way this market is lining up right now. That's in the SPY. And the Dow Industrials, because what we had out here today, folks, you had a sideways to lower market with dramatically lighter volume. If we take a look at the Dow Industrials, what you have with the Dow is this. The number in the Dow is 18,404. That's your benchmark. That's the high of September 9th. That's the downdraft. The Dow had tried to make it up into it same day, meaning the 22nd of September, failed each and every Wednesday, Thursday, and Friday of last week. And if we take a look and see the volume characteristic out here, this is what you had. Thursday was 900 million shares. Friday was 1 billion. Thursday was 1 billion. Friday was 1.1 billion. So that correlation on the 1.1 billion on Friday, we could bring this back, sets up that it's going to try it again. Today, what we did, dramatically lighter volume out here today. We did 822 million, so I suspect tomorrow it's going to go make a run for that level. Now, NDX 100 and the composite. Both the NDX 100 and the composite in the higher range. The NDX was down $9 today. You're at 48.66. That's saying, guess what? That high that was established out here on the 22nd, I expect is going to get tested. And the way this market is looking right now, it looks like it's going to be tomorrow. 48.95. The composite. What do we have with the composite? The composite out here is down $11. 5,300 we're at. The number on the composite would be 53.42. And what the NASDAQ composite also did was this. The composite backed down today with dramatically lighter volume. We only did 1.59 billion. Friday, you were trying to get into that high with 2 billion shares. That's telling me that this market's going to have one more day. Well, it has one more day of window dressing. It's today and tomorrow. And inside that context, it looks like it will more than likely make a run for it. Gold contract. What do we have with the gold contract? Gold contract, folks, is at the bottom of its range right now. And bottom line, it's going to make it or break it. When I say make it or break it, we're talking about the 1305 level. It looks to me at this particular point that you have a higher probability that it wants to go to 1259. But guess what? What's so cool about when you're at the bottom of ranges, or the top of ranges, we're going to know flat out. Is it going to basically come into it? What we did out here today is that you've done 118,000 contracts and you haven't held price. So the 1305 is game. Silver is telling us that gold is going to break the lows. And the reason is this, is that what silver has done today is this. Silver is just about at those lows. Silver's down 33 cents. You've done 52,000 contracts. You're at 1887. And then the first one we're looking for is, 1840. So 1846 is the number. You break 1846, silver will be down to 1725 in a heartbeat, because there's not much in between where we've been. And we've been in this consolidation for a long period of time. We've been in this consolidation since August 22nd. You break it, that's gonna get you into a whole lower level inside the metals complex. Bonds. We take a look at the 10-year note. The 10-year note looks to me, it's also back down today after high volume on Friday with destruction of price. Today, you have a contraction of volume dramatically, and you're coming into a couple high volume days. Today, in the 10-year, we only did 749,000 contracts. Friday, we came down with 1.6 million contracts. You're coming into, at the price point of 130.23, you're coming into 1.1 million contracts. It looks to me like I suspect we're going to get down into those levels, and that's where we may get a rejection. So it's going to be pretty cool watching this market trade out tomorrow. The reason being is that you could have a market that opens down, bonds come down into those levels, bonds start rejecting lower price at those levels, S&P comes down, starts. Well, let's see. No, so at the beginning of the day, what you can see is you can see the market down, then bonds are down, right? Market's down, bonds are. Yeah, you stay right there. I'll get this thing straight, folks. This is Tom O'Brien's TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now finished down 54. NASDAQ off 11. S&P's off 7.5. Let's go to Pete in Sarasota. Hey, Pete, what's going on?
Hey, hi, Tom. Tom, I'd like your opinion on TCEHY.
Let's take a look at it. It's 10-cent holdings. This is an ADR for a very large company in China. Let's see. So they do online advertising, e-commerce transactions in China, the United States, Europe, and internationally. The low is $16. The high is $28. Okay, so let's take a look here. So it's been a one-way shot, that's for sure.
Yeah.
Holy cow. Okay. So, take a bead point out. Let me just... so I have a long-term chart up here, folks. And when I say long-term, in 2009, the stock was at $1.20, and now we're at 27 bucks. If I just take this last run, though, let me just figure this out here. So the last run is kind of right there. It's an ABC up. So you get 590 is your A, 17 bucks, so you get 12 bucks, which gets you 25. Okay. So it just finished an ABC up,
Yeah.
you know, and it's still strong.
Yeah, that's what I mean.
And it's still strong. You know what I don't quite... I don't know. I know that when you have a 5-letter symbol, it means something, and I would find out first what that means. And at the break, I can pull this up. So you see how this equity, folks. It's TCEHY. Now, most times that last letter, Pete, right?
Mm-hmm.
It symbolizes something that the exchange makes them put on, and they're all different, but most of them means that something is missing. Meaning, is a report missing, or I don't know. I'll find out what the Y means. Okay, I can see that the company's taken in 102 billion. I don't know if that's won though, because it's probably 100. I don't know if that's in dollars or in won. Because it's a Shanghai company. Do you own it? You looking to buy it? What are we doing?
Yeah, I ran across it, and I was thinking, Jesus, boy, if this thing is for real.
Yeah, I would say that it's for real. I just, buying a high like this after an ABC up, risk reward, I don't see it. Do you know what I'm saying?
That's my feelings too. So I was looking at, what would be a halfway decent entry point then?
It would be like 22 bucks.
20. That's what. Boy,
Yeah.
you came exactly where I did.
Well, that's good, because this is what does happen, folks. Okay, when you do an ABC up or an ABC down, many times what ends up happening is that the stock is going to go do something other than what it's done, and where we got the $22 is that's kind of like where it broke out from. So that would be a natural retracement, and if you get back into that level and you do it with lighter volume, and, then you get some real action. And that's how I trade it, man.
Okay, thank you, Tom.
Okay, have a great one, man. Have a safe one. 877-927-6648. Let's go take a look at the IBB. So you get the NASDAQ biotechs out here. IBB today got down to a price point of 285, rejected lower price. You're at 290. Now the battle's going to be on where it broke down from, again, last Thursday. Last Thursday, it went from 298 down to 285. And I suspect it's going to try to test into this 290 area to 292.10 area. If we go over and take a look at Gilead, Gilead's in trouble. Gilead is it was only down $1 today, but what you have, this has been building cause for quite some time. You know, we've already come down from $123 in June of 2015, and the way this is set up, this is going to be something to keep your eyes on, because what you have is this. We're at the right at the spot. If you have listened to me for quite a while and you understand the price and volume, what I do with the out of time in the trade, when this came off the highs, this was the first price projection on the way down. And the reason being is that this is where it had volume. It had volume from $63 to $78, April of 2014. You know, so when you see something come off the highs, you can kind of just take your cursor and say, okay, where's the last time with volume? Well, we were right at it. Now, the way this works is that it's $78.60 to be exact, $78.66. We're at $78 now. The bottom of that bar is $63.50. Now, what happens is this. So picture this. Everyone that has bought this equity since July of 2014 is now in a losing position. So fundamentally, you can see why you can have sellers. Technically, it's set up for support here. The width of the bar, however, is 15 points. So if we get into this bar like just 3 points, then get out of the way. Because what I've seen is that if you get into a bar that even like a third of that bar, which is just about, you know, well, $5 would be a third. No, $4 is a third. You get into that a third, the momentum increases, you'll get to the bottom of the bar, and if this does get to the bottom of the bar, then it's big trouble. The reason it would be big trouble is that then you'd be going all the way back to October of 2013, where everyone's in a losing situation, and there actually is zero support all the way down. And the reason being the zero support, folks, is that Gilead never built a house on the way back up. They built 2 floors. Gilead started out at a low in 2011 at $17 and went straight up to 84. It only had one pullback in between that. Then it pulled back, and this is where we're at right now. It pulled back into 68, and then guess what? Went straight up to 116, went sideways for about 5 months, and then hit the high out here of 123. And if you want to see, when it hit the high, low volume high in a monthly, 233 million shares, and it comes off that with 230, nothing heavy. Bottom line, that's going to be a big number. If we go over to Amgen, take another look at another big biotech. Amgen today saved itself big time too. That went down to 164. It closed at 167, and that is crawling back inside. Is it 168? Yeah, it's crawling back inside the higher range. It's not there yet. You'd have to get back into 168 to get in that higher range. What Amgen does have, however, is that when that baby came down last week, it came down with vicious volume. So I expect you're going to see that continue to lower price. Biogen hanging at highs. Biogen right now is down $1.44, but that no doubt has hung at highs. Regeneron, this one is a highly volatile equity. That's setting up a small ABC down. So Regeneron looks to me like also this is going to be a little trouble in paradise. Regeneron is off the high of 605. You're at 402. Yeah, Regeneron 352. Regeneron's got some problems too. These biotechs, you can expect the volatility to continue in the biotechs and lower price. You stay right there, folks. We're coming right back. Dow finished down 54, Nasdaq off 11, S&P's down 7.5. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over. So, when we take a look at the next meetings in the Fed, folks, here's where we shake out. This is going to be pretty wild watching this shake out, and this is why. So, we have a Federal Reserve meeting that will come out with a statement on November 2nd, and then we have the one in December on December 14th. Right now, the Fed Fund futures are predicting, well, they have a probability of a 19%, of a 25%, 25 basis points, quarter point rate hike on the 2nd of November. And on the 14th of December, it is 58%. That's been staying kind of steady. Now, that being said, check this out, because all these Fed governors are out, and it looks to me like they are basically campaigning as the presidential campaign is going on. So first we'll go to, let's go, okay, so first we're going to go to, this is perfect. I got both of them up. So both of these happened today. Federal Reserve Bank Chairman, Federal Reserve Bank of Cleveland President Loretta Meister said the economy is ripe for interest rate increase and repeated that the Fed's November meeting should be viewed as live for a policy decision, despite its proximity to the United States presidential election. This is her quote. I would expect that the case would remain compelling for a rate hike when the Federal Reserve Market Committee gathers in Washington, D.C. on November 1st and 2nd, the week before Americans head to the polls, she told Kathleen Hayes in an interview on Bloomberg Television Monday. Meister added that the politics wouldn't affect the decision. Meister was one of 3 voters on the FOMC to dissent in favor of hiking when policymakers decided on September 21st to leave interest rates unchanged. Following the meeting, Fed Chair Janet Yellen said she didn't see any evidence that low unemployment was triggering a rise in inflation that required an increase. Meister said she expects growth to pick up in the second half of 2016 and inflation to move back toward the Fed's 2% target over the next couple of years. The argument for hiking, she added, was a preemptive one, and that the economy was not overheating. I don't think we're behind the curve, she said, but we've learned over history that the Federal Reserve should be looking ahead and not just waiting. Officials raised the target range of its benchmark federal rate by 1/4 percentage point to 0.5% in December, the first increase in a decade. Okay, so that's one Fed governor. Now here, watch this. This is just crazy. I'm going to put another one up because this Dudley just came across. Here he is. Okay, so now this one just came across. So Federal Reserve Bank of New York President William Dudley suggested that the central bank should be cautious in raising interest rates given limits on the ability to respond to a recession with borrowing costs close to zero. Noting concerns from some economists that the risk of a recession is increasing, Dudley told a central banking seminar hosted at his bank that the Federal Reserve may have limited room to cut rates in the event of a downturn in the next few years. That may raise the need to turn again to unconventional policies such as purchasing bonds. Here's a quote of his. A risk management approach to monetary policy would suggest that the more concerned one is with the effectiveness of these policies at a zero lower bound, the more cautious one would be in the process of removing accommodation, he said in a text of remarks today, posted on the New York Fed's website. The event was closed to the media. Dudley cited studies showing that the Fed's first asset purchase program that started in 2008 had helped to reduce long-term interest rates and stimulate the economy, while later efforts had less, a bet, significant impact. Okay, so let's go down here. Monetary policy remains accommodative, Dudley said, calling the expansion tepid. He said that the lackluster performance reflected the constraints of the Federal's ability to stimulate growth once it had reduced rates effectively to zero in December of 28. Dudley also played down worries that post-crisis regulation had reduced the level of liquidity in security markets. New York Fed staff have been conducting an extensive analysis of empirical measures of market liquidity and the effects certain regulations may have had on it, he said. The work to date finds little evidence based on the traditional liquidity measures of any meaningful degradation of market liquidity across key asset classes. He said that further study revealed the link between regulation and lower liquidity. The cost would have to be measured against the benefits. He said that if further study revealed a link between regulation and lower liquidity, the cost would have to be measured against the benefits of making markets safer and more robust. So you can see what is going to happen going right up to the November meeting and the December meeting, I expect, is that we're going to have all these Fed governors out basically making their case as to why there should or shouldn't be. My take is that November is off the table. I mean, you know, we'll find out, but it doesn't look like to me it's on the table. December being on the table is a big number, and this is why. Because the way the market is set up, I expect that, yeah, first we're going to get that test in the NASDAQ and the NDX 100. And so let's picture this. Here, well, I'm going to give you both ways of this. If the NASDAQ and the NDX 100 break out to new highs, and they really break out, do you think the Fed is going to go up on rates in November or not? That's one scenario, right? My take on that would be, yeah. guess what? If the Nasdaq breaks out, watch this. Let's put this out because this is crazy when you look at this. And of course, so right now the composite's at 5,300, right? We put this up on a quarterly basis. The highs of 2,000, which were over, was that 51? Yeah, 51.32. So at 5,300. We're over the highs when the market crashed in 2000. So just picture that if the Nasdaq composite get another 100 points. Bottom line, the Fed will take away, well, let's put it this way. What are they going to be their excuses that they don't? And they've come up with plenty of them. My take there, though, guess what? Take away the punch bowl, right? Bang. What does that do? Market freaks. Comes back down. That's one scenario. Now here's another scenario. We stay where we are, and the Fed in November, doesn't even come close to it, right? And that's my bigger take, that the Fed's not going to come close to it. But what happens is this, is that the closer that we get to the December meeting, the more reality is going to take place inside markets that, okay, the Fed's going to go up. Are they going to go up just once and done, which they did in December of 2015? And if that's what they're going to do, what we're going to see, I suspect in the next 3 or 4 weeks, is that someone is going to come out with that type of deal, once and done. Because if you remember last year when this was happening, folks, is that the Fed had continually said that they were going to go up, going to go up, going to go up. Well, guess what? They had to wait till their last meeting or they would have lost all credibility. But what happened before that last meeting is that it came out in the press, well, maybe once and done. And sure enough, that's what ended up happening, once and done. So you stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right on the front page, our man, Mr. Steve Rhodes, is going to be doing an outstanding workshop for all you folks. The way you come into this workshop is this. You'll see it right on the front page. You're going to see trading range boundary lines, October 19th with our man, Mr. Steve Rhodes. It's $49. What you do, you get Steve's newsletter for a full month. The workshop is going to be October 19th from 5 p.m. to 6 p.m. Eastern Standard Time. It's going to be talking about trading range boundary lines. Now, what you get with this workshop is that you're going to get 4 separate courses that Steve has already done that you can get right now, go through right now as many times as you like. One of the first courses that Steve has done that you're going to be able to get with this workshop is the Money Management Workshop. It's a 90-minute Money Management Workshop. That was $149 value. The next one is the Long Shot Line, the Oscillator Unchanged Line. That is a second workshop you're going to get. You're going to get the Ultimate Trading Signals, which is Japanese candles. You're going to get the Ultimate Reversal Patterns, which is Tom DeMark's TD setup, Gartley's Buy and Sell Patterns, and the Price Relative Strength Divergence. All of those, folks, you can get right on the front page of TFNN. It's only $49 for the month. Plus, you're going to come to the new workshop. That workshop is going to be on October 19th from 5 p.m. to 6 p.m. Eastern Standard Time. So, you know, when we look at where we are in the market right now, where we look in the election cycle, you know, all we hear is polls all day long, right? So check this out. This is pretty intense. This just come across the Bloomberg, and I got to share this with you because it's like really pretty intense, actually. So the headline reads, "Wrong again. Poll-driven wisdom failed in Colombia. Where's next?" First Brexit, now Colombia. For the second time in a few months, referendum results have made a mockery of the conventional wisdom shaped by opinion polls and investors who believed in them. Colombia stocks, bonds, and the peso fell on Monday, a day after voters rejected a peace deal with rebels. At least 3 surveys published last week had predicted that the government-backed accord would pass with 60% support or more. That's pretty intense, folks. Okay, this is what happened with Brexit also, by the way. The Brexit polls the week prior to it was saying, bottom line is that they weren't going to vote themselves out of the European Union. And, of course, the pound, you talk about taking a beating. I mean, you're talking about serious money was lost in this pound in a huge way. I'll bring up the pound in a second, but I'll finish the story for you. Each case has its own backstory, but professionals say that there are lessons that apply across the board, including for upcoming contests such as the United States presidential election, where most surveys show Donald Trump trailing Hillary Clinton. Cliff Young, president of the U.S. Public Affairs at UK Research, IPOs, say that disruptive votes are becoming more frequent. They're driven by overall angst and disgust with the system, and they're more difficult to predict. He said in a phone interview in Washington, "We're probably headed into a period where we're going to have increasingly more disruptive elections. In both Brexit and the Colombian referendums," Young said, "pollsters struggled to gauge the likely turnout, overstating young people's participation in the former case and the general level of enthusiasm in the later. We're only as good as our assumptions about who's going to show up at the ballot box, and that's harder to calculate in a referendum." Colombia's peace agreement, finalized last month after 4 years of negotiations, would have left some former guerrilla leaders in Congress rather than in jail. That was the price President Juan Santos accepted for ending the 5-decade armed revolt that left over 200,000 people dead. There were early signs that it wasn't popular. One poll in early August showed half the Colombians planned to vote no, but the government appeared to be winning people over. Several surveys in the second half of August showed the tide turning. By late September, a poll conducted by Centro Consolio found 65% support for the accord versus 29% against. Joe Twyman, the head of political polling at YouGov PLC in the UK, said when he saw the numbers like those, it seems to be a prime opportunity for a disaster. That's because the nature of the question, said Twyman, is it's a classic social desirability basis. You're asking people, do they want to support peace? People seemed obliged to say yes. As in the UK, there may have also been problems with obtaining a representative sample, for example, by including enough rural voters. Bottom line, folks, is that the amount of polls that we know that have come out are pretty amazing. There's no doubt about that. And it's all in the design of course, what the question is. And as they said at the beginning of that article, is that who is going to show up at the polls? That's the real kicker. Who's going to show up? But between Colombia and the Brexit deal is a huge deal. And what also, let's stay in the Brexit. So what has also happened out here today, is that what you're going to see is that the pound got smoked again. You know, the day of Brexit, the pound went from 150 down to 132. Today we broke to a lower level. We're at 128. And when you actually pull this back, this is pretty amazing, folks. You know, this didn't happen overnight. But what you do have is that the pound in the last 50 years has only been lower once against the U.S. dollar. The pound in 1985, and this is only for a month, traded at 123 down to $1. So it was, basically almost par. So bottom line, let's see, we're at October. You know, you want to go to the UK for a while, groove. We're getting really close to the value of our dollar being in good shape versus the pound. What's actually amazing here is that in 2007, folks, so check this out, 2007, the pound was 2 to 1 of the dollar, 2.11, $2.11 to a buck. Now we're at only $1.28. That's a big number, man. That's a big number. And so you can see that correlation also inside the aspect of how strong and how much you can buy with the dollar. Now watch the correlation. The FTSE today in the UK was up 84 and broke out to new highs. Now, if you happen to be watching Tiger TV, you're going to see nice chart, breaks out to new highs. If I put this back, let's say I put it back 5 years, what you're going to see is that you're almost at the top of the highs in 2015. And then watch this. I'm going to change this, and this is how it's just really wild, and you really want to understand currency moves. I'm going to change this from the UK, from the pound rather, to the dollar. And what you're going to see, there's the dollar. And as soon as I change it from the pound to the dollar, you're talking about a disaster. You're talking about a market that in 2014 would be like 11,799, and we're down at 8,900. How's that? Is that sick? And this has actually gone down from Brexit, and it's not at new highs. So what does that correlation mean? That correlation would mean that if you're in the UK and you're keeping your money in the pound, no problem. You're anywhere else in the world, you have a market that's going up and you're losing money hand over fist because the currency is going down so fast. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And if we just go over where we are in the marketplace right now, this is what you have. The volume on the pullback here, small. 822 million inside the NYSE, inside the NASDAQ Composite at 1.6. So you had a market that was sideways, slightly down, have light volume. Last Friday, you had a failure inside the SPY, failure inside the Dow Industrials to clear the September 9th downdraft. I expect it's gonna go for that September 9th downdraft again. Why? Because we pushed with volume on Friday, we backed down with lighter volume today. Bottom line, that sets up another push. So you're 215.78. That push more than likely was going to try to test the 217 area once again. The big kicker out here is going to be the NDX, if I bring up the Qs, and the composite, the NASDAQ Composite. So the Qs out here, also they pushed Friday with volume. They had 25 million shares. Today you back down with 19 million. That wants to go after that high. The composite came in with some real juice on Friday. On Friday we did 2.1 billion shares as it was trying to get into that high. Now, didn't make the high. Bottom line, pull back today, dramatically lighter volume. That sets up another run for that high. If we go into the bond market and we take a look at bonds, what we have with the bond market is this. The bond market out here came down today, has light volume on the move down. We did 757,000 contracts, and you're at 130.31. You know, I expect you're going to see these bonds get to like 130. What is that number? 130.23. So the 10-year looks like it can go to 130.23. Then what I expect you're going to have, bottom line though, once again, you're going to have rejection of price. These bonds continue to want higher price, you know, and we came down. They that break on September 8th was a heavy break, but guess what? It came all the way back, did it up. Even though we did come down hard on Friday with volume, what we actually also did is that we took out the high and went to higher high and had volume up at that level also. So that sets up that it wants to get back up to that level. If we go over, and I'm just going to switch gears with you for a second, you go to the yen's trading at 101.65. That yen looks like it's going to make a run. I suspect it looks like it's going to do it tonight. It looks like it wants to go break the 101.84. And if we get that, guess what? This yen can get up to this 102, 103 level, which we're going to go over to the gold contract, which would be a problem tonight in the gold contract. The gold contract and silver are laying right at the lower ends of these consolidations. The gold's at 13.14, and the good news is that we're going to find out what happens at the bottom of the consolidation. You're either going to break it with volume, break it with no volume, reject price. We'll see where it shakes out. The way that all these markets seem to be set up, I figure Brexit, the 12.59 is game. And the reason I'm saying that is that the bond market's already hit it. Our own markets have already hit it. The UK, the pound, went there first, did a counter trend bounce, and guess what? It's already back down there and breaking down. If we go over to the silver market, we take a look at silver. You're going to see silver set up the same way. And the silver's given us a better clue, actually. It's because we had volume come out of the silver market once again. The silver market's vicious, whether you're trading it up or down. Highly volatile. But the way silver's trading right now, it looks like that also wants to break that consolidation we're in more than likely tonight. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.